Welcome friends. I am here just to explain you the concept of fiscal consolidation. A concept which is related to fisc, and fisc is nothing but the government's purse. And in this purse there are two types of transactions. One by which the government receives revenue and the other the government spending. The difference in the two, if the expenditure is more than the receipts to the government, that is technically called as deficit. This deficit is categorized as fiscal deficit, revenue deficit, capital deficit, budget deficit, like that. A fiscal deficit is total of receipts compared with total of expenditure. The difference is fiscal deficit. In this, the borrowings of the government are excluded from the receipts. Now this deficit is required to be bridged, is required to be financed, and there are various ways of financing this. If this deficit is more and more, it leads to so many problems in the economy. Therefore, for fiscal discipline, it is necessary that this fiscal deficit is kept at minimum and it is financed in the right way. So the fiscal consolidation refers to narrowing the gap, narrowing the fiscal deficit, and the ways and means used to narrow this fiscal deficit. That is fiscal consolidation in short. Now, how this consolidation can be made, how this gap can be narrowed? There are 4 or 5 ways in which this can be done. As I said, revenue is less, expenditure is more. Hence, one way to narrow the gap is simple: increase the revenue. In developing countries, well, it is very difficult to levy more and more taxes or increase the rates of taxes to collect more revenue. Then what is the option? The option is to make the tax administration efficient, to ensure that tax compliance is better, to ensure that the concessions are less, the deductions are less. If this can be done, well, revenue will go up, tax revenue will go up. The second way is to widen the tax base. If you increase the tax net, that is, more and more people are brought in the tax net, well, the revenue of the government by way of taxes will go up. So widening the tax base is another way of fiscal consolidation. Third one is to increase the ratio of tax to GDP. If this is increased, then naturally, if the GDP goes up, the tax collection will also go up. These are some of the ways of increasing the revenue to minimize the gap, minimize the fiscal deficit. On the other hand, regarding expenditure, well, there is no point in reducing the expenditure, which is capital expenditure, because capital expenditure is for creation of infrastructure and thereby developing the economy. And revenue expenditure is very difficult to reduce. Hence, government normally is in a fix in reducing the expenditure. And if the deficit continues, the government has to borrow, and the amount of interest that the government has to pay on borrowings also takes a major part in total expenditure. Then how this expenditure can be managed for fiscal consolidation? One way of that is to manage the subsidies in an efficient way. And that can be done through direct benefit transfer. That is, the subsidies, concessions, incentives, scholarships, or any other welfare expenditure of the government should go directly in the bank accounts of the beneficiaries. If this is done, well, there will be a proper control on spending of the government, and government can save a lot. Even if it is not able to save, the amount will be spent at right place for right people, and that will increase the tax revenue indirectly. These are some of the ways in which fiscal consolidation takes place. Now, if we take the case of India, well, this direct benefit transfer scheme, which has been implemented for last 7-8 years, has shown the results. There are 53 ministries with 313 schemes where the direct benefit transfer is implemented, and about 98 crores and 82 crore of people respectively receiving cash subsidy and in-kind subsidy who are the beneficiaries of this. If we take the case of direct tax collection increase, we find that in the last year, the tax collection is up by 49% as compared to the last year, a year before that. And the tax GDP ratio of this year is 11.7% of GDP, which is highest in last 2 decades. The number of income taxpayer has increased up to 8.22 crores, and this is the highest number so far. Earlier it was around 2 to 3 crores. These are the ways in which fiscal consolidation has taken place. 2 things are relevant in this case. Number 1 is the government in the year 1995 stopped ad hoc treasury bills. In order to meet that fiscal deficit, government used to issue ad hoc treasury bills to the Reserve Bank of India, and Reserve Bank of India used to finance the government, that is printing of more currency. That has been stopped gradually from 1995. And second major step which has been taken in fiscal consolidation is the passing of FRBM Act in 2003, that is Fiscal Responsibility and Budget Management Act, in which it is made mandatory for the government to reduce the fiscal deficit to the extent of 3% over a defined period of time. This is in short fiscal consolidation. Let us meet in the next episode with some other concept. Till then, bye. Thank you.